Good morning, everyone. My name is Robert. It's currently 7:21 a.m., December 6th. It's a pretty gloomy day outside, I'm not gonna lie. But that shouldn't stop you from going out there and chasing your goals and dreams. So I had a subscriber comment and ask me to do an update on the video that's currently at 3,000 views. It's at 3,200 views, I think. He's just curious to see where my portfolio is at now relative to when I made that video, which is about 3.5 months ago. So today I will just be explaining a few of my investments, and I'll be giving you guys the most transparent look on what's performing well and what's not. I was curious to see, what I was invested in, because I showed you guys that video and I didn't really break down what I was invested in. Everyone invests at their own risk. I'm just going to show you what I have my money put into. So if any of you guys are curious to see what's going on with my stash account today, please stick around for the entire video. And right off the bat, you guys can see that my portfolio value is at $1,022. I don't usually get on the computer because it's obviously an app made for the phone. So obviously the interface is better on the phone. So I guess let's go to invest, my portfolio. What you see here is my total portfolio value. So that is $1,022.65. I've invested $1,014, and my total returns currently at $8.65. Now, the last time I made this video, I believe I was up around $50 or something. If you guys are keeping up with the stock market, you know that it's been facing, it's had a rough previous month or two. Tech stocks are down, and a lot of these, these big S&P 500 companies are down, which is not a big deal. I always say this in my videos when I make these, when I make stash videos. I always stress the fact that you want to be invested for the long term. If you're looking at making a quick buck, I would not be watching this video right now. I would not be investing in stash, unless you of course take advantage of their affiliate program and then you just promote the app to everybody and get paid $5, which I'm going to break that down for you guys right now. So as you guys can see here, all these $5 amounts that I've just bought, these were all referrals that I made, and some of them have grown substantially compared to others. But yeah, so initially these $5 investments that I purchased just from referring the app to people, they've grown in value, which is pretty cool because I did absolutely nothing for this money. The two investments where I have most of my cash is this one called Conservative Mix, and I'm showing you guys this right now. I'm obviously down on my invested amount. So I have 13 shares of this and I'm down $11. I'm showing you guys this just so I can just be transparent with you guys. I know it's not performing too well, which is not a big deal. I stopped doing auto stash in that investment because I don't think it's ever performed well ever since I bought it like a year ago. I just kept putting money into it, so I was like, okay, I'm gonna put my money somewhere else, because I set it up on automatic payment. So the first ETF with most of my money in it, actually the highest amount of money in my stash account, is this one called Conservative Mix. And this is the iShares Core Conservative Allocation ETF. You guys can find this, if you guys get on stash, you guys can find this, or you guys can just search this ETF and find the investment on their website. Now, I have been investing in this ETF regularly for the past year, and I don't think it has ever performed well. You guys can see I'm down 2.57%, so I'm down $11 from my initial investment amount. I just wasn't really paying attention. Like I said, I don't usually look at this very often. I just had it on auto stash. It's a feature that just automatically pulls money out. So I had it on auto stash, and I recently took it off auto stash because I realized it wasn't making me any money. I was actually losing money, so not a big deal though. I'll just keep it there. And then Blue Chips is the ETF with the second largest amount of my holdings, and this is Vanguard Mega Cap ETF. This is a really popular ETF for investors all across the board. If you have 10 grand, you can land in this ETF and then just see it grow. And I own 3.41 shares of this through stash. And my total return is 4 cents, whoop-de-doo. Not a big deal, but like I said, guys, everything that I was showing off in my previous video, the one that got 3,000 views, the market was at the peak. I made that video the day before the market before everything started going down in price. You guys can definitely, you guys can see it on this chart here. So I made that video probably around this peak or this peak. I don't know which one it was, but pretty much since then the prices have all come down. All right, and I just want to show you guys. So I'm holding conservative mix, which is these are all ETFs, but they label them with these names for some reason. It makes it easier to understand, I guess. So I'm holding delicious dividends. Now I think it's pretty silly saying these names, honestly, but this is the Schwab US Dividend Equity ETF. So you guys can obviously search this ETF and find it on the website. I'll just show you guys pretty much everything I'm invested in. So going down the line, you guys can see what's performing well right now and what's not. And I think this doesn't matter at all if you're going to be investing. Just put your money in anywhere. What you want to look for, honestly, especially in stash, is the dividend yield. So the higher the dividend yield, the higher the dividend payout that they give you. And this is important to look for throughout all your investments. So this one is 2.34. That's not that great. I think the highest dividend yield I have is the bond. It's just a bond ETF. It's at 5.7%. Honestly, for somebody just getting started, I would look through some of these investments and find out what has the highest dividend yield. You're going to see price fluctuation, especially now when the markets are sort of all over the place. That's to be expected, though. Don't just invest your money and then expect nothing to happen to it. It's going to either decrease or increase in value based off what the market's going to do. And as I said, right now the market's sort of come off of an all-time high, and therefore a lot of people have, if you just recently started investing in stash, you will see your account losing value, which I always stress this. I think investing is a very long-term outlook, especially when you're investing in ETFs. If you want to day trade and make high risk, high reward trades, that's a different story. But the average person won't be able to day trade stocks just because they can't risk that amount of money. So look at this, guys. This is my portfolio. I've currently invested in 13 different ETFs, some on a large scale, some on a small scale. This is literally just dividends that I've accumulated in my account, and I just invested in this, what is this, high voltage? It is Vanguard Utilities ETF. So you guys can see that even just the dividends that I got from whatever I was holding up here, tiny amount, $1.73. I invested it. I keep reinvesting it. I have never pulled money out of my stash account since the first time I put money in there, and I am up $8.65, a whopping $8, guys. This is what you get. I really hope you guys can understand the principle of investing. Look at Warren Buffett. Just do some research on the way he started. He started small, and over time he compounded his wealth, and he compounded all of the interest that he made from his investments, and he just kept reinvesting it and buying more. And the more size you have in the market, so $1,000, the more return you're going to make when the market goes up. So the whole point of doing auto stash and investing on a regular basis, your dollar cost averaging the price of the share of the ETF. So let's say that the price is bouncing around and you're putting in a consistent amount of money every week. So when the overall market heads, for the upside, you're going to see a lot more return if you just invest regularly and acquire more shares for a discounted price, essentially. I don't even notice this leaving my bank. It's very, very effortless. And I'm sure you guys spend $15 a week on stuff that you don't need. So there you guys have it. That is my portfolio amount. I got this comment. It was like $15 in 3 weeks. Like, wow, congratulations. I know, guys, it's not something that's like life-changing, but the whole point is if I do this consistently for 10 years, which 10 years is going to fly by like that. If I do this consistently for 10 years, it'll be better than me not doing it consistently for 10 years, because I guarantee that if I'm not putting my money somewhere where it has the chance to grow, then I'll be putting it somewhere else where I won't be getting anything in return. That's the whole point. So if I'm putting my money, let's say spending it on liabilities that don't grow in value, then I'm losing that money. It's a very entry level form of investing, but I think it's essential to do both. So I've gotten both sides of the spectrum. Everyone's like, don't waste your time investing in ETFs, don't waste your time investing in things that bring like X amount of return. Be an angel investor and invest in startups, invest in penny stocks, blah, blah, blah. I mean, you can go both ways about investing, guys. If you want to be the safe, calculated investor and move, along with the Vanguard S&P 500 index fund, then that's fine. You could do that at the same time as investing, in these startups and trying to make a quick buck. Ultimately, it comes down to whatever you feel comfortable with, whatever you think is right for you. What I tell a lot of people is start with Stash because it's so simple to use. It's such a beginner tool. It's like a third grader could literally look through it and like know what's going on. So I think it's a great way of starting. Once you do, obviously move to a more secure brokerage, move to E-Trade or TD Ameritrade. There's so many good brokerages out there, but move your money once you have started, you get the feel of it, because from the get-go, a lot of people don't understand the concept very well. The concept is simple. You have cash, you put it in an account, and the account grows or it decreases in value. And that's just it. That's literally how simple it is. Of course, you want it to grow. If it decreases in value, I mean, with stuff like this, it doesn't really matter. As you guys can see, over the span of a year, a losing investment only lost $11. Now next year, it could rebound. I can make the $11 right back. So that's the whole point. This is cash that I don't need. I don't, just $1,000. For some people, it may seem like a lot of money, but you need to get, if that's the case for you, you need to get to the point where $1,000 does not seem like a lot of money for you. Because in all honesty, guys, $1,000 is not a lot of money at all. And that's just the fact of the matter. It just, once you get to that level, you'll realize, like, all along, like, why was I scared of risking $1,000? Why was I scared of losing $1,000? It's not going to make a huge impact on your well-being, on your life, on your soul, if you have $1,000 sitting in your bank account or if you don't. So once you get to a higher level of like 10,000, that's a different story. I mean, even 10,000, that's, for some people, that's literally like pocket change for them. So guys, the whole point is leveling up and getting to the next level. So I hope you guys enjoyed this video. As always, be sure to like this video, hit the notification bell, and let me know your thoughts. If you enjoyed it, awesome. If you think, I'm wasting my time talking about making an $8 return on my money, that's fine as well. I could care less. I just think this is a great way for beginners to start investing. So thank you guys so much for sticking around until the end. I hope you guys have a productive day, and I'll see you guys next time.